right, good morning, everyone. Thanks for joining. My name is Nick Henry, and you are in the right place if you're here for the Fundamentals of Business Finance class. So I'm just getting things set up. I have a slide deck, and we'll have other folks joining, but I just want to give people another minute or two to log in. And I'll start kind of working you guys through the process of how the system works and what we're going to be covering today. So I'm going to start just for the moment sharing my screen. So I think you'll see a dual screen right now. And that's just kind of letting you know that you're here for the Fundamentals of Business Finance class. Just going to look through. Looks like we've got 15 or 16 people, so that's good. I'll just give another minute. Good morning, Micah. Some of you are already figuring out that there's a chat window, so feel free to say hi over there and chat with each other. So I am going to make this presentation full screen, and I'm going to kind of start showing you guys how this whole system works. And yeah, feel free to keep chatting, and if you know each other, say hello. But I wanted to just first introduce the team who will be working with you today. So like I said, my name is Nick Henry, and I work with Community Investment Corporation, and I'll tell you a little bit about CIC in a moment. But we'll also have on the call or on the webinar later joining us Betty Vinal, who's a bookkeeper and a financial analyst, and she runs her own business, Balance Books LLC. And so if you have specific questions around bookkeeping or accounting, those types of things, she's the one who's really gonna know how to answer all those things for you. And then Danny Nee is our executive director and has a range of abilities and knowledge, has worked in the nonprofit industry for several decades, has a dual master's and experience with running his own business. And so he'll be, he has kind of a lot of high level good advice from being in the scene, both nonprofit and public sector and private sector. So with that said, I also just want to point out that a few of my colleagues are on the call as well, or in the chat room. So Aaron Eden, you'll see, is saying hi to everyone. Aaron is kind of assisting me with this presentation in terms of, you'll see him sharing a lot of the resources that I'm throwing up on the slides he'll put into the chat window. And so that's Aaron. And then a couple other folks from my organization are on, and Caroline Nelson may be on the call as well. She's my boss and has a lot of experience in both the nonprofit and banking sector, actually. So she has a lot of great info. So feel free to reach out to her. So I want to just kind of walk you guys through how this platform works. If someone already asked, is your video or audio live? And by default, you're all off, so don't worry if you're in your pajamas or whatever. So I can invite you on screen if you have some burning question. I'm not necessarily planning on doing that, but that is a capability. I'll have Danny and Betty join me on screen later. But I did want to also point out that there's a polling feature. And so I'm going to try and put up a poll here. So that's the question. You can see it on the screen. And then if you look at the bottom, I am going to make it visible, and hopefully it works for folks. Are you guys able to see that question show up in the polling section? All right, so yeah, look for the little thing that says polls at the bottom of your screen, and then you can see the results are coming in. You can see them in real time. So that's kind of a cool thing. We'll just have a couple polls to see kind of where you guys are coming from, learn a little bit more about you. Okay, so I'll just leave that open, and you guys can keep weighing in on the answer to that question. The next feature is something called questions. So you guys are welcome to use the chat feature on the side, but there's actually a specific area called Ask a Question. And you're able to ask us questions or me questions by just popping a question into there. And then I'm going to have Aaron pop this question in to you all, and you guys can comment within that. If anyone thinks they have a good answer, you can just leave it as a comment in the Ask a Question section. So try pulling that up where it says Ask a Question, and hopefully Aaron can get that question loaded into there. I'll give another minute. I also can just type it in. There it goes. So yeah, what do we mean when we say a business is profitable? That's the question that I would pose to you all, and I'll let a few folks comment on the question. What do you think we mean when we say that a business is profitable? Araceli says good cash flow. That's certainly helpful. So we're getting comments. Yeah, so you can comment on the question itself or put it in the chat box. Melissa says it makes more money than the expenses, positive cash flow. You guys are pretty much on target. Are we for profits and nonprofits? Yeah, I'm not sure quite what you mean by that question, but a nonprofit can, at the end of the day, their goal is not to make a profit, but they can still, through various revenue streams, end up with more money than they spent. Oh, the participants. Stuart is asking whether the participants are nonprofits or businesses. Yeah, go ahead, and folks, if you want to chat in the chat window to tell a little bit about yourself. So, okay, those are kind of the basics of how the system works, and feel free to, yeah, oh, okay. I will make that a poll real quick, Stuart's question. So give me 1 second. Give me 1 sec to type this out. All right, so that's a poll. Go ahead, everyone, folks, vote in the poll and let us know where you're coming from. Hey, Andrea, good to see you. Okay, so I'm going to start moving into the presentation and just tell you a little bit about ourselves. We are a nonprofit organization. We're based in Tucson. We're on Grant and Campbell, roughly. And we've been around since 1996. And basically what we do is economic development. So we do that through a variety of avenues and programs. We have some great programs around home ownership assistance, so helping people get down payment assistance, credits on their taxes. So that's for first-time buyers. That's a really great resource. We also work quite a bit with schools around both schools that are needing financing. A lot of schools get financing through municipal bonds, and so we kind of help them with the compliance parts and staying in compliance, and then also working with families and schools to kind of understand what they're looking for in schools and what their needs are, and kind of driving the voices of families at the policy making level. And then the last I would maybe put kind of in the same bucket is we have a lending and an alternative finance team. So really we're helping people with loans. We service loans and generate loans. And then we're also introducing some new products around equity financing. So we've got a lot of different resources when it comes to small businesses that are, or nonprofits that are looking to grow and take on new endeavors. So that's just a quick bit about Community Investment Corporation. So I want to tell you a little bit about what we're doing today, what our learning objectives are. The first and most basic is we want to understand the concept and the components of profit. Like what what is profit at the end of the day and what makes up profit. You should, by the end of this, be able to figure out whether your business is profitable. You'll have the tools. You may not answer that question today, but you'll have all the tools to be able to answer that question. We're going to spend quite a bit of time on the profit and loss statement. So you'll be able to read the profit and loss statement, which I'll just refer to that as a P&L. And you should be able to prepare a P&L, at least a simple one, by the end of the lesson. And then just kind of sprinkled in throughout, we're going to touch on some pieces around like financing and how the P&L and profitability affects your ability to get financing of any type. So, all right. So we're going to do one more poll here. So let me activate it. The question is your business profitable? So let me just press visible here. All right, so, and no judgment here. You know, this is exactly why you're here. You may just literally have no idea whether you're profitable, or you may not be. And you know, this lesson hopefully will give you some insight into how you can tackle what aspects of your business are preventing you from being profitable. So we've got a good mix. No one breaking even. That's interesting. By that, hopefully, you probably know what I mean by that, but that would mean your expenses and your income are equal to each other. So, all right. And the next question, Aaron is going to pop in. How do you know the answer to that question, or how can you determine whether a business is profitable? So feel free to, once that question pops up, you can find it in the Ask a Question section, and you can comment on it there, or you can just comment in the poll on the, or sorry, in the chat section on the side. How would you know whether you're profitable? And we get a lot of answers to this, so I'll give you just another minute. So far, no one's wagering a guess. You're able to pay expenses and still have money left over. Yeah. So I guess the answer to this question, really, how do you know whether a business is profitable? We do get a lot of folks who will say, well, I have money in my bank account at the end of the day, and that's what matters. And you know, I guess I would just address that, say, I mean, that is the most important thing. So having money in your bank account is a good sign. But there are some issues with that. If that's your only method for tracking your profitability, there are a few things that can come up. And one is, and I'm seeing, Araceli, you're able to pay yourself. That's certainly helpful as well. I would just point out, like, if you have a bank account and you have other sort of side jobs, or maybe a spouse is, you know, also contributing to the bank account, then it's really hard to kind of determine whether the income is where that's coming from and whether the business itself is profitable. And similarly, if you're spending money out of that account on other things, or if you're making transfers, it might look like you have income or more expenses than you really do. And then the biggest one is maybe you've been able to get a loan, and so you have a big chunk of money appear, and you might even be able to pay yourself with that loan. But that's not really income from the business, and that's not an indication that you're profitable. So the basic answer, the shortest answer I could give is to this question is, you need a profit and loss statement. There's a tool specifically for determining whether you're profitable, and it's called the profit and loss statement. So we're going to talk about that, the profit and loss statement. But in order, so I will just point out too that the profit and loss statement is also known as the income statement. I prefer the term P&L, maybe because it's shorter, but feel free to say income statement. So just a little bit about the P&L. Like I said, it helps you determine your profitability, and it does that by summarizing all of your revenue on the one hand and all of your expenses on the other. And it does that over a specific period of time. So actually, when I asked earlier, are you profitable? I didn't really ask the question correctly, because I should have given a time frame. Were you profitable last quarter, or were you profitable last year? That's really the best way to frame it. And then it's also nice because it allows you to see trends in your profitability over time. So the way I like to kind of demonstrate this is to give a sample business, and we use the classic example of a lemonade stand. So let's just imagine that you love making lemonade. You've made lemonade since you were a kid, and you're continuing to do it just kind of as a side project. And it's something you've always done, made a little money at it, but never really tracked it that well. And so let's imagine in this scenario that July 4th is coming up, and the moms in the neighborhood have invited you to a big block party, a July 4th block party, where hopefully they have some social distancing measures in place. Hopefully we'll be open up by then. So they invite you to this party, and you have a decision to make. Am I going to participate? They tell you, hey, it's a big event. It's gotten really big. We expect 1,000 people. And so you have to decide, am I going to take this opportunity? They do also let you know that because it's so big, they're going to charge rent of $400. And like I said, they expect 1,000 people over roughly a 4-hour period. So the big question is, should you do the event? And I'm going to try and get this little thing out of the way. So how do you answer that question? I would argue that there's no really good way to answer that just off the top of your head, and that you might be best served by just making out a little budget. So let's just go ahead and do that. So here's our lemonade stand budget. First, we need to establish just a few facts and maybe make some assumptions. So like I said, you're selling lemonade, you've done it for years, you know that you can sell it at $3 a cup. That's always the price you've sold it at, and that has worked well, so that's what we're going to do. We know there will be 1,000 people at the event, and we're just going to assume that maybe 40% of these people will buy your lemonade. It's fresh squeezed, it's delicious. It's Arizona in July, people will want lemonade. So those are our key assumptions and facts. And now we can start to make out our budget. So first off, we're going to start out with our revenue. We're going to have our lemonade sales at the top. And just quickly, the math, 1,000 people, if 40% buy, that's 400 people times $3 a cup, and you get $1,200. And the less fun part, like we said, they're going to be charging us $400 in rent. So still though, if we take the difference between the two, we end up with a profit of $800. That sounds pretty good to me. So I would pose the question to you guys, does that seem like a good deal, or have I thought of everything? Have I made all the right assumptions here? Just give me a little feedback on my little budget in the chat window if you can. Does it look good? Am I missing anything? Do you like my chalkboard? As if we were doing it in real life, we would have a real chalkboard. Okay, so Araceli is asking about the cost of the lemonade per cup and the cost of cups. Okay. COGS, yes, we'll get to that, Micah. Right, sugar, yes, we do put sugar in there. Okay, all right, you guys, you caught me. I wanted to do it this way though, just because it's easy for people to get really excited about the revenue and not think about all of the expenses. So let's go through a few more. Right, competition, Kara's pointing out, are there other vendors there? So let's just do a little more digging into this. Let's think about these raw materials. So lemons, cups, napkins, straws, that kind of thing. And I'm just gonna, for the ease of math and maybe somewhat realistically, we're gonna say that it costs about $1 a cup to produce 1 cup of lemonade. So that if you sell 400 cups, it's gonna be $400. Labor is a question I would ask. Araceli's asking about COGS. I will get to that. So just hold that thought. We'll get to it in a couple slides. I'm putting up labor here because as I think about it, this is an event that we said is going to be $400. 400 cups is what we're planning to do over 4 hours. So that's 100 cups an hour, and you're fresh squeezing. Do you really think that you alone can handle almost 2 cups a minute that you're squeezing and selling to the customer? So I think it's probably best that we bring a couple people in So maybe they're family or friends or whatever. I'm going to make the math easy. You should be paying more than $10 an hour, but I just did that because it gives us some nice, easy numbers. So we're going to add $80 for 2 people over 4 hours of labor. Waste disposal, you know, this may or may not be realistic, but in real life, you're going to have to deal with waste if you're a producer of you know, there's a lot of lemon rind. So let's just say it's $50 a flat fee for all of your, you know, you talk to a local farmer who says, yeah, I'll take that off your hands and compost it or whatever. Finally, credit card fees. So if you're going to take credit cards, then you know, you get what's called a merchant service fee, and that usually comes out to about 3% of the transaction. And let's just make an assumption here that maybe 50% of your sales are going to be through a credit card. So that's a few more items that we need to add to our budget. And as I was doing this, I was like, you know, this would actually be easier to do in Excel. So on my next slide, I've rewritten the budget in Excel, and that may sound scary, and your eyes might already starting to be crossing. So let's just go through it real slowly. We have here, you know, our business name. You'll notice here I did something. Instead of calling it a budget, I called it a profit and loss or an income statement, but projected. And so I did a little switcheroo on you here. Basically what we've done by organizing our budget in the way that we did, we just organized it in the same way that a profit and loss statement is organized. So most profit and loss statements, you know, that they're going to refer to the past, but you can also do them out to the future, and it's essentially just a budget, your best guess as to what your revenue and your expenses are going to be. So we still have our lemonade sales over here, and we're totaling that. We have our raw materials. We added that at 400. We added our direct labor, credit card fees. Rent is still here, $400. Here's the waste disposal fee. And all of that sums up to what we would call our operating expenses of $948. So that leaves us here at the bottom. The bottom line is the net profit, and that leaves us with a net profit of about $250. So I just want to point out, you guys may have actually heard this expression. If you've ever heard someone say, well, what's the bottom line? That is actually a reference to the profit and loss statement. It comes directly from this, because just like you know, you might see all this and your eyes start to cross and you just say, okay, I'm just going to skip to the bottom line. What's the bottom line? It's the most important number. So that's where that comes from. So now we have our budget of $252. And I don't know about you, but that seems like a pretty good deal to me for 4 hours of work. You know, that's like $60 an hour. You know, maybe you'll have a little time for setup and breakdown, but not too shabby. And thank you for the compliment, Araceli. So for me, I would say, yes, I would do the event. Now I just want to do one thing, and I apologize, there's a trash truck outside if you can hear that. So someone asked earlier about COGS. So let me address that. Now I'm just going to take the profit and loss, our projected profit and loss statement here, and I am going to rearrange a few of the items that we had all lumped together and pull them out into something called cost of goods sold. So the cost of goods sold is the, you know, it gets its own section, and it's called, it's the entire cost to produce or acquire the goods that you're selling. So if you're a retailer, you know, and you're selling clothes, for example, it would be the cost of the clothes for you to buy them. It can also include raw materials, like if you're producing something, like in this case, you're a lemonade stand, so you're making lemonade. So all of the lemons, the sugar, even the napkins and the cups, because you're selling those as part of the package. You can actually include direct labor. So the folks who are in your stand with you, squeezing the lemons and whatnot, those are folks that you essentially need to produce your product. So that goes in COGS as well. And so once you have all of that, it's an important concept, and that's why it garners its own section. Yeah, if you have questions, feel free to ask. I want to give one more example. This is an example that is meant to be controversial, because maybe it'll help you think a little more about why COGS is important. So I like to give this example. Let's say that your friend comes to you and says, hey, I've got this great business going that I just started where I'm buying tobacco and rolling up these mint flavored cigarettes and selling them to kids in the park for 25 cents a pop. So I like to ask people, what might your first reaction to that be? And hopefully it's, okay, you're a creep and a weirdo, and I'm calling the cops. But if you want to look at it purely from a business perspective, you might say, that's great, but how much are you actually spending on the tobacco and the mint and the wrappers and all that? And so you could actually kind of map it all out, and you could weigh an individual amount of tobacco and try and figure out, like, you know, this is how much I think roughly it's costing me. So you could do like, that would be called like unit pricing. Or what you could do is you could, in your profit and loss, you could look at your revenue at the top, and then you could lump all of your raw materials together into one section. And so what that does is it allows you to quickly see, am I at least covering the cost of the goods that I'm selling? And that is a very important question for you to be able to answer, because if you're not even making a gross profit, is what it's called, then you're going to need to adjust some things about your business model. So on that note, oh, I'm sorry, I forgot one more thing. It also includes shipping in. So if you're paying, in this case, like for the lemons, freight costs, that can go in there as well. So what that does is it tells you your gross profit. And that's important to know, because that's a number that that needs to be greater than 0, no matter what, if you're ever going to have a chance to survive. So if it's not greater than 0, what you need to do is start looking at, someone suggested, you know, do I sell my cigarettes for $3 a pop instead of 25 cents a pop? That's one strategy. Or can I start buying in bulk and getting, you know, bulk discounts on my raw materials? Or what do I do with my direct labor? Can I be more efficient with that? So that's really important to understand what your gross profit is before you even get to all of the other expenses to run your business. So that's the formula. Again, gross profit is going to be your total, your revenue or your sales minus your COGS. And then I just want to point out too, we spent some time on COGS. You can get really complicated with COGS, but service companies are not going to have COGS. It's really only if you have a physical product. So that's a little bit about COGS. And thank you, Uday. Okay, so we've done our budget. And now we are going, let's say the event comes and goes, we do the event, and now we're going to come back after the fact, and we're actually going to do our P&L, fill in all of the numbers and figure out what it looked like. Now, unfortunately, the event does not go as well as you predicted. So let's go through these numbers. You can see already that you sold way less than you expected. You only sold about 200 cups of lemonade. So that, instead of $1,200 of revenue, you only ended up with $600 of revenue. Now, if there's a silver lining, it's that your raw materials, you know, you didn't end up having to, you know, use all of those raw materials. And let's just assume that, you know, you can save those lemons for the next event, or maybe you were sort of buying them on demand. So you only ended up spending $200, half of what you thought, on the raw materials. But unfortunately, oh, and sorry, your credit card fees are also a little bit lower because you only, you know, did half the sales. But everything else is fixed. So your direct labor, you know, you had those people there, you paid them, you had to pay them, and maybe they weren't busy, but you had to pay them. Your rent was $400, that's fixed. Your waste disposal was $400. And so at the end of the day, you can see that your net profit in this scenario is actually negative. So a negative $139. So that's a bummer. Okay, 2 questions about direct labor. Thank you. I am going to take a look at some of the questions, and also I may, no, that's okay to interrupt. I may reserve some of them for Betty because she's the real guru, and I'm not sure. She was going to sign on a little later. So the first question is, I've been trying to figure out if I should include my employees working in warehouse processing my stock qualifies as direct labor. And is paying yourself direct labor or operating expense? That one, so I'll start answering the second one, is paying yourself direct labor or operating expense. It probably depends on how your business is structured, and also the activities that you are that you're carrying out. If you're literally working on the product, then you should at least take that into consideration, knowing that at one day maybe your business will be large enough that you won't be doing any of that, but you will have to pay someone to do that. So that's, at least for yourself, it's something that you need to factor in. And I'll defer to Betty on these questions at a later point. So we'll come back to those. But yeah, direct labor can get confusing. So thank you for asking, and we will get to those. So on the net profit, like I said, it's negative. So does that mean we're a failure? Maybe this event didn't go well, but I heard from one participant, rather than thinking of that as a failure, think of that as like a learning lesson. This was a test. I ended up paying $139 to sort of test out whether this model was working, and now I just have to go back and kind of do some adjusting. And so what I like to tell people, I sort of do an analogy here. The P&L feels a little bit like a report card in a sense. So you have your report card, you have your GPA, and the GPA is sort of the big overall picture, and that would maybe correlate with the net profit at the bottom line, and it's either a good number or it's not a good number. But there's a lot of information in the details. So if, for example, let's say your GPA was 2.0, and you're like, gosh, I really need to get it up to 3.0. I got to get a scholarship or whatever, that's the minimum. So if your parent, let's say you ask your parents, how can I get a better GPA? They're not going to look at your report card and just say, we'll just try harder. They're going to look at your report card and hopefully say, well, I see you got an A in math, but you're getting a D in English. So it's important for you to focus on your English. Now that's an pretty obvious thing, but that's sort of what the P&L can do for you. Another analogy is, if you're into sports, you could liken it to like a stat sheet. At the end of the game, you're going to get a stat sheet. Your coach is going to hand it to you, and he's not just going to say, try harder. He's going to say, yes, the score is sort of the big number that we care about. We lost, but let's look at our free throw percentage, or let's look at our rebounding. So the devil is in the details, and the P&L should serve you in terms of really being able to look at your labor costs and your rent and things like that. So with that in mind, Danny already suggested something, a marketing opportunity. I'm curious what you guys would recommend to this lemonade stand owner who's trying to improve their business, just based on the P&L and other ideas that you might have. What would you suggest to them for next time around in terms of increasing their profitability? So I'll give you guys a chance to just throw your ideas into the chat room. Maybe, like Danny says, you needed better signage at the market. Maybe you were in a corner and people couldn't find you. Okay, Danny's suggesting better rent. I like that. Yeah, maybe you could split your space with another vendor if you don't need all that. A revenue share instead of rent. Yeah, you promise the moms, hey, I'm going to do a great business, but let's prorate my rent based on how much my sales are. Kara says raise prices by $1. I like that. So yeah, a lot of good ideas. I would just point out one other thing, which is that I made one big assumption at the beginning of this, which is that 40% of the people were going to purchase my product. And maybe you got a sense from the event, hey, there were actually 1,000 people here, but not nearly as many bought as I thought they were going to. And that's a common problem that we see, is that people are overestimating demand. So what I typically tell people to do is you want to prepare a best case scenario, a worst case scenario, and sort of a middle of the road scenario in all of your projections. And really look at realistically, what can I expect in terms of sales, and do a lot of different scenarios. And look at, worst case scenario, I'm actually turned out to be worse in real life, but So think about, and I don't want to be a Debbie Downer, but what I sort of like to joke, take your best case scenario and just throw it out, because that's probably unrealistic. And honestly, your middle of the road scenario might be a little unrealistic too. So just, spend a little time, not to scare you off, but think about like what would the worst case scenario be, and how can I work from that place to get really realistic sales. And yes, it is pessimistic. But I will say too, as a lender, we do get people coming in with projections, and oftentimes we'll just, I'll come up with my own scenarios where I'm saying, I'm going to take 25% of what they are estimating, and look at that. Look at 25% of revenue and keep a lot of the operating expenses the same, because those are fixed. What does that look like? Okay, so that's the profit and loss statement. Really, if you've done a budget and you have your revenue at the top, and then COGS concept is maybe new for some of you, but then you have your expenses, and then you have your profit at the bottom. So I just want to summarize a few components of it. Like I said, it covers a specific period of time, so that's important to note. It includes your cost of goods sold, and that helps you determine your gross profit. It lets you know your overall net profitability. That was the bottom line, right? If you really dig into it, you can see how can I use this to help me cut costs? And it can be used for projections as well. Like when someone asks for a P&L, they're typically asking for a prior, the past, but you can use it, and it's helpful if you format your budgets this way, then it's easy to translate it just into a P&L. And then it can help you get financing. And I haven't really addressed that piece, but there are, I'll sort of sprinkle that in through the rest of the presentation. So yeah, I was going to pause for a moment on questions and see if you have more questions. Feel free to ask them. I'll just go through. So there's the direct labor question, and can someone look and see whether Betty's here yet, and just chat me to let me know? Okay, Danny's here. All right, cool. So, all right. Again, feel free to just add questions as they pop up, and we will get to them. If not in the exact moment, we'll get to it here in a bit. All right. So this is where you guys get to do a little activity, and in the olden days, we would all be in a room together, and you could sort of do it in pairs. But we've created a fake or a sample business for you, and we're going to help you guys by asking you a few questions where you're going to get to actually look at their profit and loss and sort of get familiarity with it. So a little bit about this sample business. It's called All Things Fermented, and they are a producer of fermented foods, mainly kimchi and sauerkraut, which are both fermented cabbage products. They sell online. They sell wholesale, like maybe through the co-op, the local co-op, and they're also at the farmer's market basically every week. And their price is about $5 a jar, so that's what they typically like to get. I'm just going to show you, after a year of doing business, they put together a P&L, and this is what it looks like. And it doesn't all fit on one screen, so I'm going to do some adjusting here in a moment. But it looks similar to what we were just looking at. We've got our revenue, cost of goods sold, gross profit, all looks the same. It just doesn't fit on one page. So what I've done is just squeezed it onto one page by taking what would have been down here and just picking back up over here. So the operating expenses start here and they continue on over to here. So you'll get more chances to look at this. I'm going to keep popping this back up on the screen. But I wanted to, sorry. So now this is where we would sort of hand out our little homework assignment here. So the first question for you is, what time period is covered on the All Things Fermented profit and loss statement? Okay, Aaron's pointing out that you can't see the mouse, so I'll be more careful about that. So what time period is covered on the All Things Fermented profit and loss statement? So let's bring it back up. We've got the question up in the upper right, and I'll just give you guys a minute to kind of look at the P&L, and if someone wants to wager an answer, you can just throw it into the chat. So what's the time period we're looking at here? See if you can find that. 1 year, 2019. All right, very good. Okay, you guys are quick. All right, so that one was pretty easy. You're correct. January 1st to December 31st. Could have just put 2019 and people hopefully would have known that's what I meant, but it is the entire year. Question 2. How much total revenue did All Things Fermented earn during this period? So again, the question up there on the upper right. So look on this and see if you can find how much revenue was earned in total, and if anyone wants to wager a guess. Yes. Okay, you guys are getting it. 10,540. Okay. And what was the largest source of revenue for All Things Fermented? So again, let's go back here. And out of all of the sources of revenue, which was the largest? Micah says wholesale. All right. Okay. Micah and Sarah are quick on the uptake. Very good. Let's do another question. And if someone hasn't been brave enough to answer the question, let's see if we can get you to. So how much net profit did All Things Fermented earn during this time period? Again, it's a little funky because it's spread over 2 columns. It should all just be 1 column. Who wants to find the net profit on this and let the group know what the net profit is? All right, good. 47.20. It is down here at the very bottom. Okay, we've only got a few of these, so this isn't going to take long. This is really just about kind of familiarizing you with the profit and loss, because like I said, for me, when I look at one, my eyes just start to cross immediately. So now that you kind of know what the big sections look like, it should be easier. So in terms of expenses, which is greater? Total operating expenses or total cost of goods sold? So take a minute to locate where you would even find those 2 things on the P&L. And again, I apologize, it's squished over to the right, but one of the answers will be on the right. So I'll just go ahead and highlight them. So we've got our COGS section, and then we've got our operating expenses section, and it looks like the operating expenses is greater. Okay, and then staying with COGS for a minute, what is the largest cost under COGS? And the answer here, I would think, is probably pretty typical. I guess it depends on the industry. But what I'm seeing is raw materials, right? Yes, Danny is correct. Okay, so these last 2 questions, if you have a smartphone with a calculator on it or a calculator nearby, you might want to just pull that out. And so the question here is, if the owner worked 10 hours a week running the business, what was her average net profit per hour worked? So you're going to have to know that there's 52 weeks in a year, and do a little math. So I'll just give you a minute to think about that. Again, what if the owner worked 10 hours a week running the business, what was her average net profit per hour worked? So you're not going to find the answer directly on this, but you are going to find the start of it. So I'll just walk you through it, and maybe you're already doing this. So someone asked a great question. Araceli asks, how much is the owner getting paid per hour? And in most small businesses, especially if you're like an LLC, you don't actually count yourself as the owner. You don't pay yourself a wage. Your wage is the net profit. So everything that the business earns is yours. So that's basically your pay. So Micah's getting to the answer already. But basically what you need to do is say, well, the net profit belongs to the owner. She earned $477.20. And so now it's just a matter of taking that number and dividing it by the number of hours that she worked. So what that looks like is $477.20 divided by 10 hours a week times 52 weeks, or 520. And you can see that she earned about 92 cents an hour, assuming she, just pocketed that profit. So that's not very much, obviously, and I think that's pretty common for a lot of folks who are just starting out. It ends up being more of like a passion project, but something that they really want to do and maybe earn a little money doing. But it's also probably gives them joy in some other way. So it's a good way, even just earning a little bit is a good way to get started, and then you can work on building your profitability. Okay, last question on this all things fermented sample business. Assuming the business charges an average of $5 per unit, how many units would you estimate that all things fermented sold? So I'm just going to give you a minute to think about how you would go about finding that information. So we want to know how many units they sold. Hi, Betty. Betty's here. Great. Okay, so I'll just throw up the P&L here for you again, and you can, if you're already onto it, you can start doing the math. But I'll give you a hint. So you want to find the total revenue. So we're going to take that number, 10,540, and we're just going to divide that by the price. So 10,540 divided by 5, and Uday already got the answer, comes out to 2,108 jars. So that's pretty good. Great, you guys are on top of it. Okay, so Betty, maybe you can just indicate to me, there's a question here, and we're pausing for questions. So there's a question that I've been trying to figure out if I should include my employees working in warehousing, processing my stock. Does that qualify as direct labor? So Betty, are you okay with me inviting you on screen? Do you have a camera that we can get you on screen here? All right, so I'm going to invite Betty on. Just give us a minute.
Hello.
Right. Are you there, Betty?
Can you hear me?
I can't hear you. Let me see if, do you have a microphone?
Hang on.
Oh, you can hear Betty. Interesting.
Can you hear me?
I guess I'm the only one who can't. So Betty, you go ahead and answer and I'll be left in the dark. But hopefully you can answer the question for everyone.
So yes, I would include those in your direct costs in general. Another example would be like if you were a t-shirt company and you had people processing your t-shirts and then you had people packaging them, you could put all of those in your direct costs. Nick, I can't believe you can't hear me.
You're full screen now, Betty.
Great.
Can someone let me know when Betty's done? Or are you done, Betty, answering the
Yes.
question? I'm sorry that I can't hear you. Okay. Does anyone else want to grab Betty for a question? I'll go through these questions again and see if anything else. Someone's asking, I'm sure you're going to cover SG&A. Do you want to answer that one, Betty? Does that question make sense to you?
That's not making sense to me. Tell me what you mean by SG&A.
Maybe someone can clarify that. That was Uday. What did you mean by that?
Oh, okay.
Sales and general administrative expenses.
Sorry, I wasn't thinking about your acronym there.
Is that something you want to address, Betty?
Sure. So general and administrative expenses, normally you would put down in the bottom part of your P&L. Sales, it sort of depends on the type of business you are. So it could probably go either place, and it's more a matter of how you want to see the income and expenses allocated. I think I'm done. Does anyone else have a question? Yes, I can see the questions. Thanks. I'm good. Nick, I think you can take it back. Oh. So the overhead in the kitchen would be under the cost of goods. I think the easiest way to think about that when you're a restaurant is to think about the fact that that goes into the cost of your cost of the plate that you're delivering to your customer. So that's why usually those items are a direct cost. So when you're talking about wanting to know how you determine the wholesale price. So the wholesale price is what you're actually paying for the item, and then you have your markup, and different industries have different markups. So you would be determining that on your own in terms of probably your industry. Can I tell a joke? Of course, I don't know any jokes, you guys.
Can you guys hear me now?
Yay, Nick's back.
Okay. All right. Apologize for that. Okay, so I'm gonna let Betty step off for a moment and just put back up on the presentation.
Great.
And we'll invite her and Danny back on here in a bit if you're still around, Betty.
I will be. I'm just going to work on something, so I'm just going to listen to you.
Okay, great. Okay, bye for now. Okay, so let me pick this back up. And great. So sorry for that minor technical difficulty, but I'm glad we got it figured out. Okay, so a lot of you are probably wondering, okay, the P&L is great. I understand it now, but what should I actually do? And that's what we want to kind of address in this next section. So the first thing I would recommend, if you haven't already done this, you should really establish a business bank account, or at the very least a separate bank account, so that you can start separating all of your business from your personal. So hopefully you've done that, but if you haven't, it's really essential in terms of understanding what the actual costs are associated with your business, what your revenue is. If you have other jobs and you're bringing in income, or like I said, doing transfers and weird stuff like that, and then you go to someone and say, hey, I need to help, I need to analyze my bank statements, it's going to be really hard to kind of pull all that apart. And then the second one is you would start organizing your data. And you might wonder, well, how much data? I've been in business for a couple of years. Do I need to go back through all of that? And so the question I would sort of answer that question by asking you, what is your goal? And if the answer to that is, there's several different things. So the first one I would address is, if you're wanting to apply for finance, then you're going to have to start looking at data from 2019 as a very minimum, because most lenders are going to ask for your 2019 financials at the very least. A lot of them will require the 2 previous years, and some might even require year to date. That's what we mean with the YTD there. So start with 2019, and you may be required to look for more data. A lot of, we're getting this question a lot. I mean, I think everyone generally is in the same boat. It's affecting you negatively. You know that, we know that. But if you want to really dig into the details, then I would suggest that you would look at, these months, this month, the last few months, and then go back to last year, your prior year, and compare to the same time period. So you wouldn't necessarily have to do the whole year, but you could do last year this time, or even the year before this time. If you're just kind of generally wondering, how can I grow? Can I afford a loan in the future? Then I would just say take a representative year. If you have a good year where you think this is, I think, what I can expect to be pretty steady, then that would be a place to start. And then again, if you're actually thinking you want a loan, then look into what the loan requirements would be from the lender. Right now, we're getting a lot of folks who are thinking maybe I need to try something new, pivot. So if you're looking at new or different projects, then you want to project that income out into the future. So that's just, you wouldn't necessarily have to look backwards unless what you're doing already is super relevant to give you a baseline. So that was essentially like the lemonade stand that we did, projecting into the future. And then finally, maybe if your goal is just, I want to, going forward, I want to make sound financial decisions, then it's just going to be, let's start capturing data now. And if you have data from the last couple of months, you'll see why in a moment. I would suggest looking at that. But basically, yeah, start putting a system in place now. And I just want to point out, some of you may have heard that the city is offering what's called the Mayor's Resiliency Fund, a loan fund, and they do require a 2019 profit and loss statement and a balance sheet. So by the end of today, you should be able to put together a profit and loss statement. Unfortunately, the city is, I believe, closing applications at midnight on Tuesday, this coming Tuesday, so the 26th. So if there's anyone in the audience who really needs help with that and wants to put a balance sheet together, just reach out to me after this, and I or someone from my team can just kind of walk you through doing that as quickly as possible. But I would encourage you to also come to the lesson on Thursday on balance sheet. So the next thing you're going to do is create your chart of accounts, and that's a fancy term that I haven't even mentioned before. But what I would say is start getting I'll explain what it means here in a minute, is just get your expenses together and start looking at them, and then start kind of putting them into buckets or categories. And it's fairly easy to do with expenses, because there's so many things we can spend our money on, right? Like there's quite a few of them. So here's just a sample, like what a restaurant might look like. And this is very short. You're probably going to have 20 to 30. So I'm just showing you, 6 or 7 here. So, a restaurant might have food, beverage, alcohol, rent, advertising. Maybe they have like a point of sale system or computer, or other specialty software. And then I'll address this in a minute. Again, we've gotten questions on it, but direct labor and then indirect labor should be separate, if you can separate those. So the next thing with expenses that you want to do is divide them into COGS versus operating expenses. So we've already kind of shown you how to do that, but I'll just go through these. So food, the first few are, the actual product that you're selling: food, beverage, alcohol. Rent is not, so that's an operating expense. Advertising is not, nor is computer. Your direct labor, and this is a question that maybe we can ask Betty later. I've heard conflicting things, but But I would think direct labor, your chefs who are producing the food should be part of direct labor, and that helps you get a sense of what does it actually cost to produce your product. And then if you have administrative or management staff who aren't really involved in that, they would go under operating. So you do that for expenses, next, and that's basically what we mean by your chart of accounts. It's just the list of categories that you're going to kind of put your items under. So we've done it for expenses. Like I said, you'll have more. And now we want to do it for income. So again, now you start analyzing your income. You put it into different buckets, and you're going to have a lot fewer here. I would say 1 to 10. Really, 10 is a lot. You might only have, some are only going to have one thing. It might just be sales. But I would encourage you to think about, are there other ways that I can break this down, and think a little more about, your categories. And so just to give a couple examples, a restaurant, you might have your food, your beverage, your alcohol, but you also might do catering. So that would be another thing that might be interesting just for you to track separately on its own line to figure out what is that doing for me. A food processor, sort of like all things fermented, or if you're a farmer or something like that, you might be selling wholesale. You might be doing some retail or direct sale, some online direct sale, and then you might do some consulting, something like that. And then you'll notice that I put discounts in, and this is just something that is a standard way of organizing this. Generally, it's nice to know, like, this is kind of what I'm selling my product for, but maybe I ended up giving some 50% discounts here and there. So you would actually just categorize that as a negative number. Whatever money you lost by giving that discount, you would put it in to its own line as a negative number. And you could do the same for like refunds and returns, assuming you can't resell that item. So that's basically what your chart of accounts is going to look like. So Stuart, yeah, hang on to that question, and we'll get Betty back on here in a little bit to answer that. And you can throw it into the question section too, if you like. Okay, so now you have a basic idea of your categories, what we would call your chart of accounts. And so how do you actually start collecting that information and recording it? So there's basically 3 ways. You can do the paper pencil calculator method. It's old school, but it's worked for years. If you're familiar with spreadsheets like Google or Google Spreadsheets or Microsoft Excel, that's another option. Or you could look at like an actual accounting software, and there's their desktop accounting software solutions, and then now there's increasingly online solutions. So I'm going to go through each of these just briefly to kind of talk about what the process would look like. And maybe you already have a sense of which you might want to do, and so you can tune out if paper is not your thing, that's fine. But here's what I would recommend for if you're going to do this on paper. You're going to start gathering all your receipts. So for both sales and expense. You can also start gathering your bank and credit card statements because you'll see a lot of that. You can go way back in time. If you don't have receipts, you might get a good sense looking at your statements that way. And like I said, you're going to create your chart of accounts. And then you're going to start sorting your data. And I've seen this suggestion, which I kind of like. There's something called the envelope method, where you would create an envelope or a folder for each month out of the year, and you would put all of your sales, all of your expense, all of your receipts in those folders by month. Another option, if you want to get even fancier, is you can start color coding things. So maybe you have some Post-its where you're like, this type of expense I'm going to code green, or this type of all of my income is going to be yellow. I'm just going to put a sticky on there. So within your folders, you can do some further sorting using color or something like that. And then you just want to start manually writing that information out. And I'd say there's a couple ways to do this. One is you can download a template, and we actually have one, and Aaron can throw the link to this. We'll share it with everyone. throw this into the chat. So we have a Word version of a profit and loss and income statement, and you can just download it and you can tweak it. You do need to download it because it's online, but it's read only. So if you do that, download it, and then I'm just showing the top half, the income here, but we have a bunch of instructions and tips to help you kind of fill it out. There's even some instructions on the math, you know, like here you're going to add all these up and you're going to subtract the returns, refunds, discounts. So it helps you kind of walk through that. If you want to just do this on your own and write it out on paper, you're very free to do that. I just did this really quickly so you can see how you might organize it. So I like to color code. I wouldn't necessarily recommend that, but just for you guys for this presentation, you know, the revenue is at the top again. Then you're going to have COGS. If you sell a physical product, you'll have COGS, and then followed by gross profit, and then your operating expenses and net profit at the bottom. And I just want to point out that, you know, there are squigglies in here. The squigglies indicate that there will be a lot more lines in there that you'll fill out. These would be all of your categories. And then you would have columns, one for each month, and just kind of go through. And you can do it every quarter, you can do it every month. It's probably good practice to do it every month because it starts to get overwhelming if you don't. But that's kind of how you would do it just by hand. So the next option is spreadsheets. And so the process looks fairly similar. You're going to start, you know, gathering your receipts and tracking them. Here you can get your bank and credit card statements, but a nice option that folks are increasingly giving to us, the financial institutions, is we can download them in an Excel or a CSV format. CSV is a type of spreadsheet file that Excel or Google Sheets can easily open. Again, you'll create your chart of accounts, and for that you can download a template. Again, Aaron maybe could share this. We have an Excel version of a profit and loss statement, and you're free to use that. Again, you'll need to download it, and you can tweak it however you want. And note that there are comments. If you mouse over the cells, there are comments that will kind of give you tips. Thank you, Aaron. And another thing, just a general tip, you might just try researching chart of accounts for your industry, because, you know, a farm would have a different chart of accounts. And so just to some extent, you can find that stuff online and just kind of steal what other people are doing and use that for your own chart of accounts. And then you would enter your data in the spreadsheet. And if you have the data already in a spreadsheet format and you're good with spreadsheets, you can probably figure out how to just map all that over with formulas and everything. So less manual entry. This is what our spreadsheet looks like that Aaron just shared the link to. And you can see, you know, we have a version that is every month of the year. So do it that way, or you can do it for the overall year or by quarter. We have tabs for each of those within that spreadsheet. And thank you, Uday, for being here. He has to scoot out. So, so the next option, like I said, is accounting software. And this is a big topic. So I wanted to just do a quick breakdown of like the pros and the cons of using accounting software. So the pros, there's no formulas or math. It does all of this for you. There's a lot of automation to it. So you can upload receipts, you can import transactions, and it will do a lot of things for you. It'll categorize things for you. The good ones will even sort of learn, you know, based on you having categorized one thing, they'll learn the next time you import to tag it with the same category. So that's pretty nice. Really good for high volume if you're doing a lot of transactions. I'm not going to cover this today, but most of them will have a much fuller suite of services. So if you're doing a lot of invoices, or you need to stay on top of your bills, or, you know, figure out who has paid me and who hasn't paid me, it costs more, but payroll is an option, and taxes, those sorts of things they can help you with. It's nice because it will generate a report for you automatically. You just go in and you say, okay, I want my profit and loss statement, and boom, you're done. And then especially with one that I'll talk about called QuickBooks, you can work with a bookkeeper and they'll be able to kind of help you out in times of trouble or just take over your bookkeeping for you. Some of the cons are there is a learning curve. You're going to have to learn it, and if you have employees who are going to take over, those jobs for you, then there will be training. It can be difficult to do the initial setup, especially if you're starting midstream and you have a lot of data from previous years. And then some of the systems will, it can be hard to get your data out. Probably you can get it out in Excel or some format, but they might have like a proprietary format that they keep your data in. And I'm not too concerned about this, but some of them, if you're doing like a cloud-based solution, there's some degree of security. Could your data get compromised? And then obviously you'll need internet if you're using one of the cloud or online-based solutions. So there are a ton of different software solutions. We're going to highlight just a couple of them. And I want to point out, we're not endorsing any of these products. We have no relationship with any of these companies. These are just, wanted to highlight a couple for you so you get a sense of what they're like. I would encourage you to check out this article. It just came out earlier this year, and Aaron can throw the link into the chat. But ZDNet did a whole breakdown of the best accounting software these days in 2020. And they have stuff on small businesses. So one of the ones they really liked was Wave. So I'll talk about Wave here in a minute. But the basic process is going to look the same. Your first step is just going to start looking at the different software solutions and start exploring them. What features do they have? What's the pricing look like? Figure out whether they have a desktop version, whether they have apps for your phone. The apps generally are going to be like a small subset of capability, so it would just be for like scanning receipts. And then you're going to create your chart of accounts. So you actually want to create that before you import anything, and then you're going to import your bank accounts, your credit card statements, those kind of things. So it's important to get the categories set up, your chart of accounts set up first. There is a neat feature with a lot of these where you can directly import a bank feed. So they use a third-party solution called Plaid, and you just enter your credentials. They don't store that or anything, but it will import your bank feeds. And there are different restrictions on it. I think some of them will go back like up to a year. Some of them maybe only a few months. But if you're trying to get 2019 together, it's kind of nice to be able to just import directly your bank account, link it directly, and it'll show up in your accounting software. And then, like I said, you can download your statements, previous statements in a CSV or Excel format, or some of them will allow you to download in QuickBooks format, and you can import using QuickBooks. So real quickly on Wave, I just want to highlight why I liked Wave. It's free. That's the big thing, and it's free to sign up, and there are add-on solutions like payroll costs, but the basic plan is free, so it doesn't hurt to just sign up and kind of play around with it. They have great invoicing, and obviously it's an accounting tool, and it's fairly easy to learn. Some of the cons, I saw some posts from a few years ago where it was like it's buggy and stuff like that. I think they've gotten a lot better, but there were complaints about that early on. And then the other con is it's not as well known. So a bookkeeper, if you're going to bring one in, they might say, "I've never used this. If I don't want to work with this." So this is what it looks like. I'll just show you. I set up an account just to kind of play with it. You can see this is what you do. You go into your chart of accounts. You go to expenses, and you'd start filling them out. They fill out a lot of them for you. They create a chart of accounts, kind of a standard one, and then you can adjust it as you like. But like, for example, I added this section down here: lemons, sugar, etc. Like the raw materials, probably should have called it. So you can go in and get all that adjusted before you import anything. And then you can see all your transactions over here under accounting. So you can start categorizing them yourself. Say, oh, this is sales, oh, this is insurance, et cetera, et cetera. And it's kind of nice because once you do one, it'll find all the other transactions that are similar and say, hey, do you want to categorize these similarly? And then if you go to the reports section, you can just pull up your P&L and set the time period. And they have a summary view here. And then you can click on details and get kind of more breakdown. You can export it. So like I said, mostly free. They do have some charges. And then the payroll is where it's going to start to cost you more. QuickBooks, I'll do this quickly. So the biggest pro with QuickBooks is that it's super powerful and it's universally known. So everyone, it's the gold standard. Everyone uses this. If you're going to bring a bookkeeper in later, they'll know exactly what to do if you've started out in QuickBooks. They also offer bookkeeping support. That's an add-on feature, but you can hire a bookkeeper through QuickBooks and find someone that way. And then they have a ton, it's not free, but they have a ton of resources and demos, tons of training videos. And I'll show you how the demo works in a minute. But the downside is it's not free. I think unless you're like a very small, like a sole proprietor, it's $12 a month. But they do have a free trial. And this is just totally subjective, my opinion, in playing with the two. I find QuickBooks a little harder to get around, a little harder to learn. But once you do, obviously there's a lot more capability there. So this is kind of cool. We'll share this. We have a whole resource page on both Wave and QuickBooks with a bunch of links. And so we'll share that. But they actually have a demo business that you can go in. You just log in, and it's a landscaping business called Craig's Design and Landscaping Services. And you can just literally go in there and play around with it as if it was your own business, which is kind of cool. They don't do like bank feeds and stuff like that, but you can kind of go through it and, like here you can see, here are the sample expenses. You can actually go through and recategorize them and, mess it up as much as you want. You just hit refresh and it starts over. So it's kind of a nice way to get in and like play with what you're looking at. Play with the system before committing to it. So again, that would be under the accounting section. The chart of accounts, you can go in there and play with it, see what they have as their sample chart of accounts and play with that. Again, under reports, you'll see similar reports. You can do a profit and loss report and they'll just generate it right there for you. I think it's a lot more detailed. And maybe a little harder to look at, but that's because the business is a little more complicated. Just give you a quick sense of the pricing. Like I said, there is a $7 plan if you're a freelancer or kind of a self-employed sole proprietor, but it typically starts at $12 a month. And then if you want to add payroll, and you don't have to, but that's going to cost you a lot more. I think it's $22.50 a month plus $4 per person. So again, we're not endorsing any of these. We're not pushing these. We have no relationship with them. I just wanted to give you guys a sense of kind of what you would be looking at. So that's the link that Aaron just shared into the chat, where you can find a lot more, tutorials. QuickBooks has a ton of tutorials and stuff like that. So we just wanted to share that with you. And then one final tip, and then I'm going to open it up to Danny and Betty, but I want to go through some tips if you actually are going to go down this route for kind of how you should be careful as you're importing things. So you're going to link all of your accounts. After you create your chart of accounts, you're going to link all of your accounts. You might just practice categorizing 1 or 2 transactions to see how that works, or doing a manual transaction. Then you're going to import your bank statements. And like I said, you can do that even further back. So you want to get all of your data in there first. That's my main suggestion. Get it in there before you start getting kind of going down the rabbit hole of recategorizing. Because if it's all there to start with, it'll be easier to do it in sort of bulk format. Yeah, manually enter any data that like cash that you wouldn't have captured through your bank statements. And then you can do this bulk categorization. So then the last piece that I found a little hard, but Wave was pretty good about it, was be careful about your transfers. So if you're transferring money over to your credit card to just pay off the balance, that may look like income, but it's just a transfer. So Wave or QuickBooks or whatever system should be able to let you just categorize that as a transfer, so it doesn't look like you had that much more income, because that's obviously paying off credit card is not income. So so that's kind of the main bulk of the presentation. So let's get Danny and Betty on the screen here. So give me a minute to invite them. Okay. I'll get Danny first.
Hey, Nick.
Hey, Brian. Okay, Danny. And we got Betty. Let's get Betty up here. Okay, so I think if I close this one.
There you go.
All right. All right, so here's the team. So were there questions already that you guys took note of that you can just answer off the top of your head, or should we start going through the?
Well, I'll take a stab real quick at Stuart's. I know he said it may be more complicated, but I think it was a really good question, because one of the key things in producing a good profit and loss statement and a good balance sheet and really understanding your business is taking some time with yourself. And it's actually an exercise in self-discipline, because I think we all get kind of carried away when it comes to trying to have your bookkeeping system keep track of everything. So an example would be like if you are a company that makes shirts and you're buying buttons in every color. Your bookkeeping system is not the place to keep track of your green buttons and your red buttons and your blue buttons. You can do that through another system. And I think that is one of the things that people run into problems with, is all of a sudden their chart of accounts is so large because they're trying to track items and detail. And really the reports are to capture your financial status, not some of that other information. The other things I would suggest is really thinking about your main categories and then doing some subcategories under it, but only using those if you really need to have that information. So if you just need to know total utilities, put it all to utilities. If it's important to you to understand gas, water, electric, then put those under utilities so that you're seeing a summary system going on there. And then Stuart, I do think based on yours, classes it's another way of working within a system, so you can run P&Ls for each of your sections. You mentioned like hotel, nonprofit, restaurant. I think that would work really well for you. And then the only other thing that I wanted to say, just listening to Nick's comment, for all of you there, I really recommend for all small businesses, once you start having employees, forming a relationship with a payroll company. I think there's a lot of liability doing payroll in-house on your own. And there's so many changes that are going on right now, even like right now if the federal government starts reducing, if they choose to do a payroll tax credit, that's something that you have to learn. If you do it wrong, then you're in trouble. So I really recommend partnering with someone on those types of things, and then it makes your life easier.
And if I can add, so Betty is our bookkeeper at CIC, and I am the director. So I'm sort of on the management side. So a little bit to also to Stuart's question is, the nice thing about we use QuickBooks, but whatever software you have is, if you can get a good chart of accounts, like Betty is saying, there are ways to set up memorized reports that you can look at it differently really easily. And from a management standpoint, and I sort of put it over in the chat, is that what we're submitting to the county when we do a grant, or when we are submitting to a bank to get a loan, anything like that, that's a different set of P&L than I probably use to manage and look at expenses and those types of things. So it's important to kind of figure out what is it that you want to be looking at. And there are different reports that can really, with basically a press of a button, change the dates or whatever it is, it kind of pumps that out for you. So taking some time with your bookkeeper and really thinking about what it is. Betty will tell you that we've categorized things, several times, probably several times a year, because we just think like, oh, well, something else is, something else we want to look at now, or it's, I think we were looking at it the wrong way, and that's what happens. And so we wind up recategorizing. One thing that we started to do, for instance, is we wanted to look at by program. We have 5 different programs, and we used to not do our accounting that way, but we switched to be able to do that. So even as you mature as a business, your needs may also change a little bit. So, that idea of being willing to sit down with your bookkeeper and say, hey, is there a way that we can look at this and get this information out easily without doing what Betty said, and making your chart of accounts completely crazy and crazy making for your bookkeeper as well. There's a question here, Kara. Let's see.
Towards the top, I'll read it out so folks can hear it. I know this one is not about cash flow statements, but your comment about transfers made me think about this. How do you handle drawing on a line of credit when you're doing a cash flow statement, so it doesn't look like positive cash flow when it's a draw on a line?
So your line of credit should be set up on the balance sheet, because it's not really income and it's not your money. And so I know Nick will be going over the balance sheet next week, but whether it's a line of credit or a loan or even like a cash transfer from a credit card, those would all be on the balance sheet, and then it will not show as income.
Yeah, and so that a cash flow is a little bit different than a P&L and a balance sheet. Even when we're looking at cash flow, we want to know how much cash is available for us to, pay our employees bills, all those types of things. So it is a little bit of a different report than either the P&L or the balance sheet. A lot of people. So when we say that, the idea is it's not really looking at revenue and expenses per se. They're part of that, but it's really looking at how much money is going in, coming in, and how much money is going out, and how much money is left to basically pay all of the things you need to pay for.
Okay, and we've got a question from Stuart. What is indirect labor? Is that consultant?
Is it Stuart's asking like a consultant?
What is?
I need to know what indirect labor is.
Yeah, is it like are consultants considered indirect labor?
Yes. Yeah. So a consultant would be down as indirect labor. They're helping you figure out your business. So other indirect costs like that might be legal, could be down there. Your bookkeeper would be down there. So.
Yeah, they tend to be the administrative people, or again, people that are helping attorneys and things like that. It's basically anybody you're paying, any person that you're paying for that isn't directly making your product or providing the service that you're selling. That's then going to be indirect labor.
Yeah, so Stuart, I'm seeing your question there with marketing. Like if you hire a marketing person, that would go down into your general expenses. So even if it's an in-house social media person, I would put that down within your advertising. And Stuart, I'm just going to answer one more question in terms of that. When you're talking about your staff, oftentimes you could have administrative people on your payroll. So, if you're a restaurant, you may be wanting to categorize your servers one way, your kitchen one way, and then you still could have like a general manager who maybe some of their wages would be administrative.
And this is something that happens so we're a nonprofit, and this happens with nonprofits a lot, as people look at what the administrative and overhead costs are. It drives us a little bit crazy, because I don't think it's always the best way to look at how a nonprofit is performing. That's an editorial for another time. But I do think it's important for you to understand, how much administration and overhead is going into your business relative to the amount of revenue and your profit, because again, it's a way to kind of look at what you're doing and to be able to manage those costs, the expenses, versus what it's bringing in. At some point, you want to look at your marketing, and if you increase marketing, you want to see if you actually have an increase in your revenues, and you want to be able to have that separate. And it's not going into the cost of a good sold. It's not going into your product or service.
Okay, we got a question here that I'll pose to you guys. How do I know if I'm profitable enough to get a loan? Is it too risky for my business? What should I be looking at? You want to take that, Danny, or do you want me to?
Why don't you start, and I'll fill in, since you do the work on the ground on it.
Sure. Yeah, I mean, I sort of briefly mentioned that during the presentation, but it's if you've done it in the personal sphere, it's a similar calculation. You're basically looking at, like, what a lender is going to do is look at your net profit, and they're going to look at what the payments are going to be, what the required payments are, and basically figure out, like, can you afford the loan? So they call it, you probably heard the term debt to income ratio. In business, they call it the debt service coverage ratio. But it's the same idea. We would look at all of your existing debt, and we would look at what would adding this debt do, and what is your ability to pay that with the existing profit that you have. So it's important to have historical data that shows that you have some profitability. That's going to help you out a lot. If you don't historically have profit, or you're really new, it's a lot harder. But I would say the next step would be to kind of look at projections, and we talked about that. Do a projected P&L to figure out what am I realistically expecting to happen under this scenario. And it's really important to be able to explain to a lender, if you haven't been historically profitable, how is this project going to make you profitable, and why are you confident in your numbers that show that you're going to be able to afford the payment. And then we'll also look at, like, just being able to cover the payment razor thin. That's going to make it harder, with that ratio, rather than just 1-to-1. We like to see it to be, like a 1.25, which, what would that be, 5-to-4 or something like that. So it's helpful if you have a little bit of breathing room in terms of your historical profitability to be able to afford the loan. So that's what I would say. I don't know what you want to tack on there, Dan.
Yeah, I mean, there's an unfortunate part, and this is, it's super cliche, is that people say sometimes to go get a loan when you don't need one. And the idea is simply, what they mean is, when you're making enough revenue and you have this cushion and you're doing really well, that's when it's easiest to get a loan. When you're actually, like, as Nick is saying, razor thin, or if you're not showing a profit, it's really, really difficult. Lenders tend to be very risk averse. It's why, honestly, organizations like ours exist, because we do a different type of underwriting. And even then, as Nick is saying, we still use those ratios. Lenders want to see a history of success, versus just 1 month that you had just a month and did really well. They want to know that will be able to continue over time. and again, super unfortunate. I mean, COVID-19 is completely crazy and nuts, but this is part of that reason, that idea of like, well, what happens if something bad, happens or occurs? Are you going to have enough reserves? Are you going to have enough money to be able to continue to make payments? Because that's what they're looking at, and they look through that. Lenders look through a doubtful lens. I hope that we're a little more optimistic in how we look at things, but quite honestly, that's the way that banks and credit unions look at. They're looking at, well, what if something goes bad? Like how are we going to get paid, basically? And so that's why they want to see a long track record.
Okay, we've got one that maybe Betty's going to want to answer this. It's I'm not sure this is the right place for this question, and if it is not, please feel free to delete. But as an owner, what are the pros and cons of paying yourself a salary versus dividends?
So it really depends on how your business is structured. So if you are structured as an LLC, then you do not put yourself on as a salaried person. You don't run yourself through payroll. And the main reason you don't want to do that is when you go to file your taxes, you're going to have to pay the self-employment taxes on your overall profit. So it's like getting taxed double because you have payroll taxes taken out of your check, and then you file your 1040 with your personal income tax return, your Schedule C, and you're going to get your net profit. They're going to charge you your self-employment taxes. So if you're an S Corp or a C Corp, then you do go on and you take a paycheck. So if you're an LLC, it really comes down to which, when we're small businesses, mine's a small business, at the end of the month, if I decide that I'm going to take money out of my company, it moves over as a draw on the balance sheet, and it's just the money that I use. And then my taxes are all based on what my net profit is. So whatever is happening to the owner is not really calculated as a wage per se.
Yeah, and we'll talk about owner's draws and that kind of thing next week in the balance sheet lesson. Okay, we had another one from Melissa. I am constantly confused about tracking and paying transaction privilege tax. I do mostly services, classes and consulting, but occasional products. Are there any resources to set up my accounting system to better track that?
So you can track it in QuickBooks. QuickBooks does track that. You also can track it by a spreadsheet. I would say I think it's one of the areas that all small businesses, even as a bookkeeper, I hate that tax. So also watch on the Arizona Department of Revenue's website. They often have some classes, and I have taken several of them and found them helpful. They're not all the time, so you sort of have to stumble on it. But basically, keeping track of your products and your services separately is the key to it. And QuickBooks will do that for you. It's a little cumbersome to set up, but it will do that for you.
And Betty, I don't know if you have experience with this, but I've seen that on QuickBooks, they have, you can hire bookkeepers through QuickBooks. They have also like a setup service where they charge $50 to kind of help you get your chart of accounts set up. They don't do payroll and that kind of thing. I know that. But do you have any knowledge of like how good those services are, or what you would recommend for people who maybe need a little more support in a bookkeeper in terms of using that service or finding someone locally who can use QuickBooks and help them out?
Yeah, I think they have there's a lot of good resources, and it's just connecting with the right person. I also have taken several classes at Pima Community College on bookkeeping. So they often have some just, classes that'll help you a little bit more in depth where you would actually have a teacher there. So those are a couple of good options. Honestly, it's a difficult area because there are not a lot of bookkeepers in Tucson. So the more you can educate yourself, the better off you are.
Checking if there are any other questions. Aaron asked, how do I know if my cats are assets or not? Well, the answer to that is obviously yes, they are.
No, they're not a dog.
We get into that debate, but assets are something that we'll cover next week because they appear on the balance sheet. So we'll go into that. Maybe not specifically around cats and dogs, but we'll talk about assets. Okay. Any other questions? Or Danny or Betty, is there any other information you wanted to add?
I mean, I don't know that I want to add any information. It's just, I'm so glad that people are taking the time to do this. Thanks, Nick, for all the time that went in setting this up. The business, you know, your business, if you run a business, this is part of it. It's essential. And Nick may have described it, I'm sorry, before I came on, but you know, one of the things that has been really tough is we've watched people who wanted to get some of the federal money and the stimulus, and they didn't have profit and loss statements or balance sheets ready, and they may have missed out. And these are just, this is not the place to be a maverick. You know, you be innovative in your business, but not in your bookkeeping. You know, you want to make sure that you are tracking this. This is really an essential part, even if you're doing it in a relatively simple form. It tends to get more complicated as you get bigger, more successful, and hopefully you can hire people to help you do that. But it is just one of the things that is interesting. If you're going to start a business, profit is really important. That's you know, why you're starting a business, and you need to know whether or not you're making a profit. And it also, when you have a P&L, you have your financials in shape, it gives you a lot more opportunities, whether it's to get an investor, somebody who may want to come into the business and help you out, help you buy something, whether it's getting a loan. These are always going to be required of you. So this is not the place, you know, if you're somebody who's like, I'm just doing it however I'm doing it, you know, it's kind of like driving on the wrong side of the road. Like, that's not where you want to get innovative. You want to be on the right side of the road, and you want to make sure that you have this ready for when you need it. I don't think anybody thought that we'd be in this position, but it's been really heartbreaking for us to see some people who have had to now scramble to try to do this. So again, probably preaching to the choir. Thanks so much for the people that are here. We're so glad that you've been here to hopefully learn something. And again, we're happy to help you put these things together to make sure that you get the resources that you need.
Yeah, and I'll just add kudos to everyone who's on the call, you know, working to learn this. And if I had any piece of advice, it would be, I know we all multitask and we all think our plates are too full, but I would try and carve out a couple hours a week that, you know, you don't look at your cell phone, you don't do anything else, you only pay attention to your books. And that way it's not quite so overwhelming. And I do think that the better shape your books are in, the more you know about your business. And it's a really good way to see quickly a problem that you maybe didn't even realize. You're so busy being creative that you don't realize you've spent all this money on one area that's not working, or you have an employee who's stealing from you and you all of a sudden realize something's not quite right here. You see that by taking care of your books on a consistent basis.
Great. Thank you guys for those insights. And yeah, just echoing what Danny said, thank you guys so much for participating. And also to Aaron and other folks from CIC who were helping out. And I think Aaron pointed out in the chat, but this was recorded. So we covered a lot of material and there were a lot of sort of detailed answers. So this recording will be available and we'll send it out. I think it's just a matter of minutes after we close it that it becomes available. And we're also going to add you all to our email list to make sure that you get the link to the recording and learn about other opportunities that we have coming up. So thanks again to everyone and our best to you. And hopefully we'll see you next week.
Thanks, Dick.
All right.